Hello, I'm David Cassidy with the market summary for the week ending Friday, the 28th of May. Well, last week's equity market action was surprisingly dull despite the volume of US economic data announcements. Economic data can be volatile at the best of times, but it is particularly volatile at present, given data readings are being distorted by last year's unprecedented lockdowns and containment measures, which effectively meant that the global economy hit a brick wall and ground to a halt, and by the current economic reopening, which is unleashing pent-up demand, and at the same time we have supply chain disruptions and bottlenecks. The week's main economic announcement was Friday's US core PCE reading. PCE, or Personal Consumption Expenditure Core Price Index, is the Fed's preferred inflation measure, and after the recent sharp increase in US CPI inflation, a big upside surprise could have seen equity markets question why the Fed is determined to ignore the increases. Thankfully, while the inflation reading did rise, it was in line with expectations, which suggests to us that the current uptick in inflation will not be anything more than a temporary blip. So, fingers crossed, equity markets will soon stop fretting about tighter monetary conditions. Elsewhere, US durable goods orders declined by 1.3% in April versus economist expectations of a 0.8% rise. Now, while this was disappointing, when we dig down and look at the ex-transportation subcategory, which excludes aircraft and military spending, and so is a better barometer of business equipment investments, it shows us a very different story. Not only did April's reading rise more than expected, 1% versus 0.7%, but March's data reading was revised sharply higher to 3.2% from 1.9%. Additionally, Thursday's US weekly jobless data continued to drop, which is positive. Initial claims fell to 406,000 from 444,000, while continuing claims fell by nearly 100,000 to 3.642 million. Looking ahead, this week, a shortened week, of main interest will be the US employment data after last month's big miss. Elsewhere, we have US ISM, Eurozone CPI inflation, Eurozone unemployment, Eurozone and Japanese retail sales, Chinese PMI, and Japanese industrial production.